Forgotten down payment options. If you or one of your clients is looking to buy a home, but they just don't quite have the money for a down payment, I want to remind you of 3 down payment options that people don't often think about. But first, let's take a moment to really kind of focus on what the minimum down payment requirements are by loan type, so we're all on the same page and we know what we're talking about when we get into these options. Let's start with conventional home loans. So Fannie Mae, Freddie Mac conventional home loans require a 3% down payment. Now, there's a caveat here. There's really 2 different scopes of how lenders are going to approach a conventional 3% down payment home loan for buyers. One's going to be a Home Ready or Home Possible 3% down program. That program has income limits or census tract limitations on it. And on that program, it doesn't matter if they're first-time home buyers. If they qualify for the program, 3% down is the minimum down payment. Now, on a standard Fannie Mae, Freddie Mac conventional 3% down payment loan, at least one of the borrowers has to be a first-time home buyer. So that's what it looks like, conventional 3% down. Let's move on to FHA. FHA is going to require a 3.5% down payment. On VA, assuming that the veteran has full eligibility, that is going to be a no money down option. And then when we get into jumbo financing, oh boy, this one varies quite often. It's going to vary by the lender, by the credit score, etc. So on jumbo, kind of think that about 10% down is generally what we see. Every now and then we'll get a whiff of potentially a 5% down in the jumbo space, but there's all kinds of restrictions on that. So in your head, for this purpose, for now, think 10% down on jumbo financing, again, with a whole lot of caveats. Okay, so let's talk about the 3 forgotten options for down payment. First, gifted funds. We see more and more parents and relatives gifting their relatives monies for both down payment and or closing costs. Sometimes it's a lot of money, sometimes it's not a lot of money. But all of it helps, especially when we're in a situation where we have a borrower that is trying to compete in this market. If they can get a gift from family member or relatives, this can really be pivotal to their ability to get under contract. A couple of things to remember though. When funds are being gifted from a family member or relative, there is going to be a gift letter that needs to be signed. The lender is going to require it. And essentially what it's going to say is that the family member or relative is gifting the funds to the recipient and not expecting repayment. So that's the first thing. The second thing is depending on the loan program, the relative may have to provide a bank statement to document that they had the funds to be able to gift to the client or our borrower. Now that's really important because on FHA does require the bank statement from the family member that's gifting the money. On conventional, it's not required. The bank statement's not required. So very often we'll get in these situations where maybe the family member that's gifting the money, if the borrower is using an FHA loan, if that family member doesn't keep money in their bank account and they've got $10,000 cash at home and they take the $10,000 and they put it into their bank account, guess what? That's going to be problematic for being able to document the source of funds for the gift on an FHA loan. But when we go conventional, the bank statement from the family member or relative that's gifting the money is not required. So really there's a pivotal difference from a lending perspective in how funds are being gifted based on the loan program. What we have found is it's really important to have this conversation up front with our clients. So if we are talking FHA, we know this client has to go with an FHA loan based on whatever the reason is. We're telling them out of the gate that their family member that's going to be gifting the funds, they're going to have to provide a bank statement. We tell them this up front because we do not want any surprises during the process. And sometimes family members do not want to provide their bank statement. So again, really, really important from the lending perspective. This is a lending guideline. We want to be proactively communicating this concept to home buyers, especially if they're going to get gifted funds and using an FHA loan. The second forgotten down payment option is using a 401k to be able to either set up a loan or potentially take a distribution. So 2 different options here. I always advocate for the loan depending on the situation because in that scenario it's generally not a taxable event. But if somebody's taking a distribution out on a 401k, that can be taxable. So we try to educate people and make sure that they understand that they may have resources with their 401k to utilize those for down payment and or closing costs. We certainly always tell them to contact the plan administrator and their tax advisor to get tax implications of doing that. But very often we have people taking out 401k loans to be able to use those monies for down payment and closing costs. And this is really important. If you've got somebody in a situation where maybe they've got a house, in some other state, and it's not going to close prior to our closing here in Arizona, so it's not contingent on that closing, and they just need a little bit of extra money in the short run, a 401k loan can be absolutely, without a doubt, the game changer to be able to give them a couple of months of being able to have access to those funds. Then when their house sells, wherever it is, they can pay off that 401k loan and be good to go. The third down payment option that's very often forgotten is down payment assistance. I say it's forgotten because in this competitive market, it has been extremely difficult to get buyers under contract that are dependent on down payment assistance. But you know what? Things are going to change. Markets are going to change. So it is one of those things that we want to be sure that people do understand that these programs exist. The other thing to kind of keep in mind is if you have a buyer that's going to purchase a new build and their lender, if they have a preferred lender, offers the down payment assistance programs, that could be fantastic because in that situation, you're not going to be faced with the typical resale market conditions of a seller not wanting to accept an offer contingent on down payment assistance. Why? I don't know. I guess there's probably some thought there that, it makes their offer weaker. I get it, but also, these down payment assistance programs can be vital to somebody's ability to actually purchase a home, and they're pretty, easy to obtain. I mean, we're approaching this, the monies are available, we're making it contingent on the down payment assistance. Honestly, in my mind, there's no difference on that than us verifying funds and then that person spends it prior to close of escrow. So, in reality, down payment assistance isn't as bad as it may sound, but I get it. In this market, it is not easy to get offers accepted with down payment assistance, but I do want to remind people that those programs still exist today. Please take a moment to subscribe to this channel. I really do have a passion for home loan education. I know it's crazy, but I do. And I want to be sure that our community is aware and understands what the heck goes on if they're going to be taking out a home loan. If you have questions, don't hesitate to comment below or call me at 480-725-0150. Until next time.